Chris was talking about looking forward to interest rate rises because he is a saver, and there is an organisation for savers called Save Our Savers. It campaigns for people who save in the UK. And Simon Rose is from Save Our Savers. He's in our London studio. Simon, where would you like rates to end up?
To end up,
yes,
I'd like them to go back to the free market level, which is roughly, historically speaking, 5%. But it's quite clear from, hearing everybody today, and indeed for understanding the level of debt in the country, that any interest rates at all, while longed for by most savers, are going to hurt other people considerably.
You're campaigning, so tell me what you're campaigning for. Would you like the banks to pass on more of the interest rate saving to savers?
Well, savers have actually borne the brunt of the crisis over the last 5 years plus. We calculate that the loss of interest taken together with inflation, which of course has been higher than it otherwise would be, has cost savers something like £350 billion. So you're essentially, this is money that's still there in the economy. It's been transferred from savers effectively to borrowers. We have subsidised borrowers to that tune. Now, that's the same as 3 years of government borrowing. It's almost the same as quantitative easing, that extraordinary measure of producing money and injecting it into the economy. It has been a massive disincentivisation of savings and an encouragement of debt. And personal stories aside, it is extremely dangerous for the future of the economy, as Mervyn King recognised just as he left, having done as much as possible, of course, to stoke it up in the first place.
Annie Shaw, our finances agony aunt, who's with us today from cashquestions.com. You made this point, didn't you, just a few minutes ago, that almost no point saving now because the returns just aren't good enough.
Well, I think it's always worth saving because you need to have this cushion against the things going wrong. As some other of your callers have pointed out, when they've got themselves into a bad situation. But of course, it's not possible for everybody because their money is being allocated to their daily needs. Yes, it is very difficult to save and to get a good return. I mean, it's all to do with risk and return. Savings put in a building society or a bank are risk-free apart from the risk of inflation. So your return is not very good. And it was never really very good when inflation was much higher because it's only just a couple of points above the rate of inflation if you were lucky. And sometimes, as it is now, it can be below the rate of inflation.
Simon, I don't know if you heard the people who had emailed who were saying that it's all very well encouraging people to save, but if you can't make ends meet, you cannot save.
Well, I know, and it's terribly difficult, except, of course, in the old days, when we were a sort of savings culture, people saved up for things they want, and it is still, despite interest rates being low, cheaper to save for something and buy it than it is to buy it on credit. But the overall problem is that for the country as a whole, we are heading for another financial crisis because nothing has been put right from before. As a nation, we save 5% of everything we produce, and despite the budget for savers, OBR figures show that is going to go down to 3%. We are a country that is consuming more than we produce, and we are heading for total disaster. Individual stories aside, it is impossible to keep consuming more than you produce without something appalling happening further down the line.
Simon Rose from Save Our Savers, thank you for that.